Jason McIntosh joins us now from Motion Trader here in the studio to discuss. Jason, good to see you.
David, good to see you too. Annette, lovely to meet you on the desk.
Finally, back on air. Now, you've given us a couple of stock picks. I'm going to pick my favourite because I spoke to the CEO, Tinybeans.
Yeah.
Tell me how that is going.
Yeah, really interesting. We actually discussed this on the call. It was about 5 weeks ago. I was on with Carl Capolinga, and we both really liked what the company is doing. We liked the fundamental story, so that was a tick. We both looked at the chart action, the price action on the charts, and that looked good, so we got a tick there. The only thing holding us back was we wanted to see some near-term momentum, and well, we got that this week. They had a good announcement out, and that sent the share price into the positive momentum camp.
Just on the screen there, so yeah, that's looking good.
And just before we get to that announcement, just I guess some background for people who don't know much about Tinybeans.
Sure.
I guess for most people it's probably a fairly obscure stock. Only got a market cap of $80 million. What it is, it's an online social app for parents with young kids. So the idea is you take photos of the kids, everyday memories, upload them onto the app, and then you can share them with family and friends in a safe environment. It's not going into a news feed, it's just the people you allocate.
And you own the stock images as opposed to the other platforms.
You do. So it's basically a photo journal. And so it's getting some good runs. It was Apple's app of the day twice, so 2019, 2020, and it's a subscription-based model. So and a lot of companies are taking these subscription models on. They seem to be working really well. And if you can develop a good platform with people want to come back to, you get a very valuable asset base. So what Tinybeans is saying, 92% of people are resubscribing, so that shows, I think, that there's a real need for the product. It's filling a need in the market, people are going for it. It's
people aren't trusting the bigger platforms, right? Without
naming
names.
Right. Yeah, so this really seems to be the family-friendly online option. Cash flow positive. Growth is really impressive, 157% annual growth increase. It's off a small base, but nonetheless, you're seeing that growth there. And the average monthly user base grew 21% in the last 3 months. So I think the big thing for this company is getting into the US market, which they're doing. And this is the basis of this announcement, which came out, because they've said that the shares have just been given approval for electronic clearing and settlement in the US. So this means US investors can buy the stock in American dollars, they can trade in their own time frame, time zone, and the company is saying that this is going to improve liquidity, it's going to broaden the shareholder base, and expose the company to the US capital markets.
All right, so that's a buy.
I think it's a small cap with a very interesting story. One of those ones which over the next 2-3 years could rise, 3, 4, 5-fold. You just never know with these ones. The risk reward looks really good, may go nowhere, but it's really a numbers game with these things. You look for the stocks with interesting stories and with a lot of potential, and get involved in the ones that run, you let run. The ones that don't, you move on. But I think Tinybeans, well worth a close look.
Jason, we're starting to go and bump up a little bit against the time, but LiveHire is another company that you've seen on the move at the moment. What have you seen there? Yeah,
just pinged on my scans last week. And so that's how I'm finding these stocks. It's all about looking at the momentum, looking at momentum indicators, which is showing signs of a trend. Really interesting, when you step back and you look behind the trend, you often find some fascinating stories, and LiveHire is one of them. Market cap of $100 million, so again, small stock, off the radar for many people. It's a cloud-based online recruiting platform, and so it's all about using technology to engage the right people, get them into the job. And what's interesting, they're doing some really interesting things with technology. So they're using an AI aspect to their platform, which is helping to find and recruit people. It's most of their business is Australia and New Zealand. They're moving into the North American market. Like, they've signed the Victorian government. They've got companies like Baby Bunting, MyState, and in the US they've got, I think it's Canada actually, it's an $80 billion energy provider. They got that on the books, as well as a regional healthcare provider. So they're getting some good runs on the board. Annualized earnings was up something like 21%. It's no debt. They've got cash burn still. Cash burn was $1.7 million, but that's down 52% year on year. With 17 million in the bank, I think that gives them a good runway
But
to roll
looking
out.
for new markets costs money, so.
It is, and they've got I think they've got the cash to do that, to develop the business. Again, a small cap with a lot of potential. Downside looks reasonably contained, I think, at these levels, and the upside potential is great, and that's what you want. You want that asymmetric risk reward where you can manage your risk, but you're opening up a lot of upside if it works. I think it's a company that can use technology to disrupt the recruiting process. So a really good one to consider.
And moving on to Michael Hill, they had some pretty good results yesterday.
Yeah, really interesting company. It's where the other two are emerging businesses. This is more of a turnaround of an established business. Yeah, that's right. And so look, from 2016 through till about 18 months ago, 12 months ago, it was having a shocker. It was down something like 90%. Got down to 22 cents.
It was almost a bit of an old-fashioned joke, Michael Hill, really.
Yeah, but
what have they done to
this
turn
is this is a thing I think with partly this COVID situation has possibly helped some companies because they've gone away, they've restructured, they've streamlined their operations. These guys are coming back quite well. Net profit was 84% to $39 million. And same-store sales are up 6%. And this is against a pretty gloomy backdrop. So the company said they lost something like 3,700 open days for their stores across their network. That's Australia, New Zealand and North America. So that's a pretty big headwind to be going into and coming up with a good result. So I think they've got it's a good turnaround story. It's probably the big driver for this company going forward. Maybe their growth aspect would be their digital sales, which are up 100%. So that's up to $18 million, which is 6% of total sales. And that's a priority for the company to continue doing that. So it's not about shutting down bricks and mortar. It's about, I think, giving their customer base more options and maybe opening up new markets which weren't there. So look, I think Michael Hill's one to, 2% dividend yield, scope to increase that. I think if they start, the need to conserve cash and hold on the balance sheet is less as we go forward. Perhaps they can start getting that to shareholders. So look, a nice story there, I think.
Everything old is new again on Michael Hill.
Jason McIntosh from motiontrader.com.au. Thanks for joining us on the program today.
Always good to be on. Thank you.